So kind of some of the drivers behind the collapse of those banks in particular is basically interest rate policy. And so they had bought a lot of long-term government debt that would have been perfectly fine if held to maturity. But when people are asking you for their money back for their deposits, you have to a lot of times sell the investments that you have at whatever the market rate is at that particular point in time. So because we have seen a lot of interest rate rise, the value of the bonds that they had bought was below what they paid for them. And so it created this gap in their financial statements and simply not enough money to pay back all of the deposits that they received, which is why they encountered that crisis. Now, there is fear that the contagion will spread. For example, if you look at companies like Charles Schwab, they came under immense pressure. Their stock was down over 30% at the low point just because of these type of developments. Just today and yesterday, Credit Suisse out of Switzerland was under similar pressures for different reasons, but the Swiss government had to step in and say, no, everything is going to be okay. So it reflects an environment that, in my opinion, has a lot of anxiety and fear driving decision-making based on the macro landscape and on the very real challenges that the banks face.
Is the fear justified?
The short answer is it's overblown. Now, there are some signs for concern. In particular, the interest rate changes that we've seen over the last year have made it very difficult for guaranteed investments like bonds, which a lot of banks hold. They are below market value relative to where most of those bonds were purchased, especially if they're longer-term duration bonds. But the fear that we are having a financial crisis on par of what we saw in 2008, 2009, with the likes of Lehman Brothers and Bear Stearns going under, that's, I think, not realistic. If you look at the rules that regulate the banking environment, the larger banks, Wells Fargo, Bank of America, JP Morgan, they're beholden to much more stringent requirements to hold capital in availability to their clients than they were during the financial crisis of the Great Recession. And those rules remain in place. Now, at some point, the smaller banks, like the ones that went under this week, managed to successfully lobby and get the government to remove those rules for their operations. They said, we're not like the big guys. We're beholden to different set of circumstances. You shouldn't hold us to the same kind of accountability requirements. And because that happened, then they got into some worse behavior. But overall, it should not be a major concern to people that the banking sector is in some sort of crisis.